Good day, students. How are you? And how is your stay at home? I hope you're doing very well. Today is another account class, and the person you're hearing his voice is your account teacher, Obiake Andrew, at Sleek Angels International School. Today, we'll be doing our revision classes, and we'll be looking at the topic Departmental Accounting. You know, in our last class, we talked about this Departmental Accounting, and we look at, I told you that a Departmental Accounting is a business that has grown, an old business that has grown into having various departments, and these departments are arms of the business. Now, the purpose of this department is to ascertain the performance of each department. So in this class, we'll be looking at the definition of departmental accounting. We will also state the objectives of departmental accounting. We will also look at the advantages of departmental accounting. Then we will prepare a question on departmental accounting. Now, what is departmental accounting? Departmental accounting is an account prepared to ascertain the profitability of an organization, to know if the business has made profit or loss. Now, when we talk about departmental accounting, just like our school, Sleek Angels International, we have different departments. We have the nursery section, we have the primary section, we have the secondary section. These are departments. Now, in the performance of each department, we will know if these departments we've mentioned are doing well. Now, we have objectives of departmental accounting. Now, one of the objectives is departmental accounting help the managers to ascertain the profitability of each department. Two, it helps the managers or proprietors to formulate policies. Now, what we are saying is departmental accounting helps proprietors and managers to formulate policies to make a decision how to plan, how to control an organization. Now, we mentioned advantages of departmental accounting, and one of the advantages is unprofitable departments will be revealed. Now, we have mentioned that an organization can grow to having different departments. Now, these departments, are they all profitable? That's the essence of preparing the departmental accounting. Are they all profitable? Are they performing optimally? Are they doing well financially? Is the departmental accounting that will help to ascertain all of this information. So, at this point, we've defined departmental accounting. We've also looked at the objectives of departmental accounting. We've also mentioned the advantages of departmental accounting. Now, we'll look at an exercise. And this exercise at the board, the question in the board was drawn in the essential textbook. Exercise or revision question 31.1. So if you have your textbook, please open Essential Textbook, Departmental Accounting Exercise 31.1. This is the question. We are about to post, but before I start the posting, I will read the question line by line, and please endeavor to copy down the question, because we will be using it to post, and when I start posting, we will clean up the question. Please, I start. The following were extracted from the books of Jonah Enterprises from the year ended 31st December 1990. Sales Department A, 52,000. Department B, 68,000. Department C, 30,000. The total is 150,000. Purchases Department A, 30,000. Department B, 45,000. Department C, 25,000. The total is 100,000. Opening stock Department A, 7,000. Department B, 12,000. Department C, 3,000. The total is 22,000. Closing stock Department A, 10,500. Department B, 15,000. Department C, 5,000. The total is 30,500. Other expenses are insurance 800, commission paid 3,500, rent and rates 2,460, delivery expenses 700, administration expenses 4,560, discount received 770, salaries 18,300, advertising 1,210, depreciation 2,100. Additional information: expenses are to be apportioned on the following basis: A, salaries, depreciation, rent and rates, administration expenses on equal basis. B, discount received purchases. C, advertising, commission and delivery expenses, sales. D, insurance ratio. We are using ratio of 3:2 into. We are using ratio 5:3:2 to A, B, and C respectively. You are required to prepare departmental trading profit and loss account for the year ended 31st December 1990. So, in preparing that question, this is the departmental account question sketch that I've already done. Take a look at it. Please, you have to do it. Know that we are dealing with a business that has 4 departments. Department A, B, and C. Then the additional column is for total. So you know now anything you do on the debit side, you also do it on the credit side. This is an advanced account. That is why there is no need to write the debit and the credit side. You know it. So here, now, and remember, in posting this question, we're going to use 4 methods. One, we're going to use the turnover basis. 2, we're going to use the floor space basis. 3, we're going to use the number of article basis. And 4, we're going to use the direct basis. Please take notes. So, here, this is Department A, Department B, and Department C. This is what? Your total. Now you rule. Remember to put your Naira sign. The Naira sign is a sign of the country in which the financial statement is being communicated to. Remember, we are using Naira sign because we are in Nigeria and we are communicating with our Naira. But if you're using advanced country like the US, remember you are going to use dollar and all of that, as the case may be. So here, your A, your B, and your C, then you put total. You put your Naira sign, your Naira sign, your Naira sign. Now, the question we have that you have with you there, you know that you have our opening stock. Our opening stock, Department A, is 7,000. B is 12,000. Our opening stock B is 12,000. C is 3,000. Now, if you add that, you are going to have 22,000. Now, you add your purchases. Your purchases is Department A, 30,000. While Department B, 45,000. Department C is 25,000. Your total, you add this to this is 75 to this is what? 100,000. Now, you add them. This to this is 37,000. This to this is 57,000. This to this is 28,000. Then you add your total. Our total is 122,000. Now, there is no returns in the question. There is no carriage in the question. So this amount becomes our cost of goods available for sales. for sales. Then we less closing stock. Our closing stock A is 10,500, while Department B is 15,000. Department C is 5,000. Then total, you add this to this is 3,500. Now you add, you less from here. You're lessing this. Take up your calculator. You minus 37,000 minus 10,500. You are going to have 26,500. 57,000 minus 15,000. You are going to have 42,000. 28,000 minus 5,000. You are going to have 23,000. 120,000 minus 30,500. You are having 91,500. These figures are called cost of goods sold. Then you bring your sales here. Your sales, Department A is 52,000. Department B is 68,000. While Department C is 30,000. Total is, if you add, you are going to have 150,000. We do not have returns inward, so we are going to minus this, and we do not have interdepartmental transfers. So we are going to minus A, will minus A, B will minus B, C will go to C, and total. So let's press your calculator. 52,000 minus 26,500. What you have is 25,500. 68 minus 42,000. What you have is 26,000. While 30,000 minus 23,000. What you have is 7,000. Total 150,000 minus 91,500. You are going to have 58,500. Now, if you add them, if you add this to this, you are going to have 52,000. If you add this to this, you are going to have 68,000. If you add this to this, you are going to have 30,000. thousand. If you add this to this, you're going to have 150,000. Now these amounts are called gross profit. The gross profit of the various departments will be reviewed. So this A, this is the gross profit. B, this is the gross profit. C, this is the gross profit, and this is total. So at this point, you know that every debit entry must have a corresponding credit entry, and every credit entry must also have a corresponding debit entry, as the principle of accounting demands. So at this point, going by that law, we are going to bring this down to this point to correspond with this. So here, 52,000, 68,000, 30,000, 150,000. Then you rule, no, every debit entry must have a corresponding credit entry, and vice versa. Then you bring your gross profit out to this point. Is still on the principle of accounting. Every debit entry must have a corresponding credit entry, and vice versa. So this is your gross profit. This is your gross profit. This is your gross profit. Now, at this point, we will now move straight to prepare our expenses to ascertain the net profit of the business, having known the gross profit. So at this point, remember, please know that your additional information will guide us. So please, you have to follow your additional information from the question. Okay, let's move on. So we have salaries. Meanwhile, we'll do our workings here. So we have salaries. Remember our departments: A, B, and C. Salaries, we were told that we should use equal basis. So since we have three departments, Department A, B, and C, our salary, the actual figure is 18,300. We are using 3. So this divide 3. 3 departments, A, B, C. Because in the question, we were asked to use equal basis for salaries. So here, all over 3. Here, 18, all over what? 3. So, you press your calculator. 18,300 divided by 3 is 6,100. 6,100. 6,100. So, we post it. Salaries, A department, 6,100. B department 6,100. C department 6,100. Total 18,300. We move on. We move on to depreciation. Depreciation. Come to workings. Depreciation. A department, B department, and C department. Depreciation, we were also asked to use the same, that is equal basis. So the actual is 2,100. So we are dividing it by 3. 2,100, 2,100. So 3. Press your calculator. 2,100 divided by 3 is equal to 700. 700. 700. Please, let's post it. Depreciation, A department 700, B department 700, C department 700. Total is 2,100. Let's move on to rent and rates. Rent and rates. Our rent and rates, the figure is 2,460. A department, B department, C department. 4,000. 2,460. B department 2,460. C department 2,460. You divide it by 3. Divide it by 3. You divide it by 3. Press your calculator. 2,460 divided by 3. You have 820. 820. 820. We'll move on. Number B, discount received on purchases. Okay, let's post it. Rent and rates. Rent and rate. A department 820. B department 820. C department 820. Total 2,460. Now, discount received. Discount received, pay attention here. They said we should use purchases. So what you're going to do here is A department is equal to, our purchases here is, A department is 30,000. Now what you're going to do is, if you add this plus this plus this, you're going to have 100,000. So here you now put your 100,000. Then multiply by the actual discount received, which is 770 all over 1. Let's work it out. 30,000 divided by 100 times 770. What you have is 231 for A department. For B department, for purchases, B has 45,000. 45,000 times 770 all over 1 all over 100. If you work it out, press your calculator. 45,000 divided by 100 times 770, you are going to have 346.5. C department, on C department, you have under purchases 25,000. 25,000 times 770 all over 1 all over 100. This is equal to 25,000 divided by 100 times 770. We have 192.5. So we will post it. Remember, we are not posting discount to the expenses because it's discount received. If you are to be discount allowed, we will bring it to expenses, but this is discount received. So it will come here under the gross profit. You write add discount received. At this point, this discount received, remember, will not go to expenses. You are going to add it here under the gross profit. So please let's add it. A department 231 for A department. B department has 346.5. While C department has 192.5. Total is 770. Let's move on. So we have advertising. Advertising. A department, B department, and C department. In advertising, they said we should use sales basis. Sales basis. Now, sales basis is the same thing with the purchase basis, but this one we are going to use sales. The other one we use purchases. This one we are going to use sales. So under it we have department A 52,000, department B we have 68,000. Department C, we have 30,000. Remember, our actual figure for advertising is 1,210. So what we are going to do here is this times 1,210 all over 1 all over 150. The same thing here, 150 times 1, 2, 10 all over 1. Here, 1, 2, 10 all over 1 all over 150. So this is, let's work it out, 52,000 divided by 150,000 times 1,210. We have 419.5. Here we have 68,000 divided by 150,000 times 1,210. We have 548.5. This is approximately. Here, see, 30,000 divided by 150 times 1,210. We have 242. So we post it. Advertising. Advertising, A department, 419.5 approximately. B department, 548.5. And C department, 242, total 121. Move on to commission. Commission paid. Now, commission paid, we will also use the same method. A, 52,000 all over 150,000 times 3,500 all over 1. B department, 68,000 all over 150,000 times 3,500 all over 1. C department, 30,000 all over 150 times 3,500 all over what? 1. Let's work it out. Press your calculator. 52,000 divided by 150,000 times 3,500. We have 1,213.3. Here we have 68,000 divided by 150,000 times 3,500. Here we have 1,586.6. Here we have 30,000 divided by 150,000 times 3,500, 700. Please, let's post it. Commission paid. Commission paid. A department has one two 13.3. B department has 1586.6. C department has 700. Our total is 3,500. Still under C, we have delivery expenses. Delivery expenses. Under delivery expenses, A, remember we are using the same method, that is sales. So under delivery expenses, we have 52 times 700 all over 1 all over 150,000. While B department has 68 times 700 all over 1 all over 150,000. While C department has 30,000 all over 150 times 700 all over 1. Press your calculator. A department 52,000 divided by 150,000 times 700. We have 242.6. While B, we have 68,000 divided by 150,000 times 700. We have 317.3. 30,000 divided by 150,000 times 700. We have 140. Let's post it. So here, delivery expenses. So here, from here, we will move to the posting. Let's post that. Delivery expenses. Under it, we have A department 242.6. B department 317.3. C department 140. Total 700. Okay, we are done with C. We are going to insurance. Under insurance, we are asked to use ratio, and we are giving ratio of 5 into 3 into 2. 5 into 3 into 2. So A, B, and C department. Now, our insurance actual is 800. So A, 800 times 5. No, A is 5. A is 5. So 800 times 5 all over, you have to do this. 5 plus 3 plus 2 is 10. Correct? So what you do is you divide it by 10 for A. B is 800 times 3 all over 10. While C, 800 times 2 all over 10. So A, 800 times 5 divided by 10, you have 400 for A. B, 800 times 3 divided by 10, you have 240. While C, 800 times 2 divided by 10, you have 160. Let's post it. Here is insurance. Insurance, under insurance department, A is 400. Department B is 240. Department C is 160. Total is 800. So at this point, we are done with all our expenses at this point. So what we are expected to do at this point is we are going to add here, pick up your calculator, you add here, this is 1, this is 3, this is 7, and this is 5 and 2. That is 25,731. While this is 26,346.5. While this is 7,192.5. While this is 58,700. So here we are going to sum our expenses, all our expenses. So let's sum A. We are starting with A. A 6,100, plus 700 plus 820 plus 419.5 5 plus 1, 2, 1, 3.3 plus 2, 4, 2.6 plus 400. What we have is 9895.4. Under B, Department B, we have 6,100 plus 700 plus 820 plus 548.5 plus 1,586.6 plus 317.3 plus 240. What you have is 10,312.4. Under C department, we have 6,100 plus 700 plus 820 plus 242 plus 700 plus 140 plus 160. What you have is 8,862. Total 18,300 plus 2,100 plus 2,460 plus 1,210 plus 3,500 plus 700 plus 800. You have 29,070. At this point, this is the total expenses incurred in each of the department. So at this point, we are going to ascertain the net profit of these various departments. And in doing that, what we should do is here, Department A on the debit side minus Department B. If you can minus from A, from the credit side to the debit side, better. Because if the figure is higher, you minus accordingly. So let's move on. At this point, 25,731 naira, 25,731 minus 9,895.4. The difference is 1,585.6. B to B. Under B, 26,347 6.5 minus 10312.4. We have 16034.1. We go to C department. C department, under the credit side, you see that the debit side is higher than the credit side. So we minus from here. Okay, so at this point, we are going to minus this to this. 8862 minus 7192.5. We have this. We have 1669.5. Remember, this is bigger than this. So the difference between them will not be posted here because there is a credit balance. So we put dash here and we bring this figure here and say 1669.5. Okay, let's move on. So let's do the total. Total is 58770 minus 29070. We have 29,700. Now, at this point, we will now add. We'll add this to this. If we add them, we will have 25,731. If we add this to this, we have 66,312.4 plus 16,034.1 26,346.5. Here we'll bring down this 8862. Then here 58. We are adding them 770. Now remember that this figure is called the net profit. Net profit. While here, this figure is also called net loss. So this figure here is dash, dash, dash. This figure is called net loss. So every debit entry must have a corresponding credit entry and vice versa. So we'll close the account and you bring it down to 26, 25, 7, 3, 1, 26, 3, 4, 6.5. 8, 8, 6, 2, 5, 5, 8, 7, 7, 0. Okay, so this is the balance. This is the sum of the account. And from this account, from our illustration, I told you, if you can recall, in our objective, I told you that the departmental account is prepared to ascertain the profitability of each department. And I also told you that in the advantages, I also told you that the unprofitable department will be revealed. Now, in the survey here, we've all seen that Department C is not profitable. Now, how do we know? We know it through the account we have prepared. The account shows the performance of the various departments. So I can also say that departmental accounting is an appraisal accounting that is prepared to appraise each of the department in order to know if the department are performing optimally or not. And it has shown. Department C, we incurred loss in our work. So please go through it, study it. This is the account. In this class, we've defined departmental accounting. In this class, we've mentioned the objective of departmental accounting. In this class, we've also discussed the advantages of departmental accounting. So please, if you have a question, I'm going to give you an assignment, you do it and forward it to my WhatsApp line. Here is your assignment. Please do it properly. I'm reading the question. Do it properly and send to me. The following balances of Olata Company, you are required to prepare departmental trading profit and loss account for the year ended 31st March 1991. Purchases, sports, 52,800. Electrical, 43,600. Musical, 34,800. Total, 131,200. Sales, sports, 80,000. Electrical, 64,000. Musical, 48,000. Total, 192,000. Stock at 1st April 1991. Sports, 14,600. Electrical, 11,240. Musical, 9,120. Total, 34,960. Stock at 31st April 1991. Sports, 15,400. Electrical, 11,760. Musical, 11,520. Total, 38,680. Rent and rates, 4,200. Sales commission, 4,800. Heating and lighting, 31,500. Advertising, 1,800. Depreciation, 1,944. Delivery expenses 1,880. Administration expenses 9,600. The expenses are to be apportioned equally between the departments with the exemption of the following items, which will be apportioned as stated. 1. Salaries and wages to be apportioned sports 40%, electrical 30%, musical 30%. 2. Rent and rates, light and heat on the basis of floor space occupied. Sport 30%, electrical 50%, musical 20%. 3. Sales commission relates to all departments at the same fixed rate. 4. Delivery expenses to be apportioned on the basis of sales. Please, this is the assignment. Do it properly and send back to me. If you have necessary questions on this topic, any area that bothers you, please do well to reach me, and also send the assignment on my WhatsApp number 080-635-43211. 080-635-43211. Thank you very much. Please stay safe. Observe your medical directions or precautions. If you are going out, endeavor to wear your face masks. Please maintain your social distancing. Take care. Is your account teacher Okidim Obiani Andrew. Thank you very much.